Let's get more on this now with Mark Humphrey-Jenner, Associate Professor of Finance at the University of New South Wales Business School in Sydney. Great to have you back on the programme, Mark. Now, industrial profits have come in better than expected in the first 7 months of this year. What's this telling us about China's state of recovery?
Well, thanks for having me. And China's industrial profits came in with a bit of a pleasant surprise. So, for example, they increased 4.1% year on year versus 3.6% year on year in the June reading. And that in particular was coming with high-tech manufacturing profits increasing 12.8% year on year. So what this is telling us is some of the stimulatory measures that China has been bringing in have been having a bit of an impact, particularly in the areas to do with semiconductors and lithium-ion batteries and EVs. Now, a lot of those profits are coming from exports, where EVs, for example, have been going overseas, and they're going to face headwinds from tariffs that are going to come on board. But it does show us that at least parts of the economy are reasonably healthy, in part on the back of stimulus measures, in part on the back of just general global recoveries going on.
Right now, what more needs to be done by authorities to boost domestic demand in China?
Well, there's probably a few things that authorities could do, and it's not going to be a one-size-fits-all solution. And in reality, perhaps a number of these will need to be done in combination. So first, we've got what's going on with interest rates. Now, interest rates haven't been cut recently, but they had been reduced quite a lot in the past. So, for example, the one-year prime rate is 3.35%. The one-year medium lending facility does at 2.3%. Now, both of those, if one reduces them, could stimulate more domestic consumption, because if consumers in China are facing high-ish interest rates, which historically has been the case, if they're facing also concerns about property and whether construction will actually be completed, and also concerns about employment, because youth unemployment is high enough that reporting of that isn't really going on, then cutting interest rates is one way to stimulate the economy. That's to some extent macroeconomics 101, and they've been doing a bit of that, but one of the hurdles that the PBOC has been facing is they don't want to stimulate bad growth, and they don't want to stimulate a speculative bubble. So they're really trying to tread a tight walk to get the lending facilities going in the right direction. Then we've got perhaps other stimulus measures. So, for example, one could have subsidies to EVs or whatever. So recently, for example, the Global Times has reported there's an up to 2,000 yuan subsidy for people trading in their old appliances for new appliances. Presumably, the goal is to get them to trade in new appliances or trade in for new appliances manufactured by domestic producers, thereby both increasing domestic demand and also increasing domestic companies' profits, which they could potentially lead into more R&D and the like. Now, that's capped at $280 approximately, so 2,000 yuan, and there's only one subsidy per item category, and it's about 15% of the final sales price in many cases. That could potentially stimulate growth. They could do similar things in other areas, for example, the EV subsidies or with increased EV logistics to encourage a greater uptake, which is something that Chinese vehicle manufacturers have been really focused on at the moment.
All right, Mark Humphrey-Jenner, we'll have to leave it there. Thank you very much for your insight.
Thanks a lot for having me. Great being with you.